It's Tuesday, October 4th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting. We did see more volatility come into the markets today, not all of it exactly as anticipated. But I'm going to start off with the E-mini NASDAQ because I think this market offers a pretty realistic and viable scenario, whereas some of the others may not. I think we are probably in a rising wedge pattern. I do not have tremendous conviction that we bottomed the fourth wave of this wedge today because the second wave was a bit deeper. So we could trade down as much as 48.25 before heading back up again. And the key to this particular forecast is this low here at 48.13. If it comes out, this forecast goes away. Otherwise, it looks to me like we are going to trade up towards 48.90, 48.95 later in the week in the E-mini NASDAQ. Taking a quick look at the E-mini S&P, this market washed out the obvious support at 2140 today and even took out these recent lows here and went absolutely nowhere. This market is just punishing a lot of people. I just don't know. I could see how we, in a fashion similar to the bonds, might get a full 76% retracement here, in which case we'd be looking for a return to 2115. So if we do see continuation to the downside, the E-mini S&P could get down to 2115, and although that would seem like quite a reach for the NASDAQ not to fall apart. But we'll see if it really does head down. It looks like 2148, 2150 is kind of a pivotal zone, and if we can get back up through there, then I would see the reason why we couldn't retest the upper end of the trading range here at 2165, while perhaps the NASDAQ makes its nominal new high. All right, taking a look at the crude oil market, November crude market did not break down, continues to trade in this, what looks to me to be a rising wedge, pushing on a string kind of pattern, but there is a really bullish case to be made. Well, I shouldn't say that. There is a really bullish case if prices start to move sharply higher. It looks to me like 48.25 is the line in the sand for this forecast. We need to break it, or we will be looking at what could be a runaway in a stealth third wave. I just don't think it makes sense, but market action is really what matters. So again, we need to break 48.25 in order to set off any kind of a indication that the crude has topped. And all I can say is I'm not a buyer. I don't want to buy this market. Treasury notes have not yet made the target for the 76% retracement near 130.08, although they're creeping down there. I think we are probably looking at a small courtesy rally here. 130.22, give or take, ought to be about as much as it is. So looks pretty good as far as the selling scenario. Moving averages nicely caught the previous peak. It's somewhere up there. Market showed no real divergence. So would not want to see the market trade above 130.30, however. So again, that's kind of a key level for me. A lot of people may look at it a little bit differently, but say we're looking at a courtesy rally scenario in the 10-year. Okay, nat gas traded abruptly higher here. The push above 295 turned everything kind of on its head. I mentioned yesterday that I thought that the nat gas was likely going nowhere in some kind of a goofy consolidation, and I believe that's still to be the case. I do like what happened today a lot. I am short-term bullish. I think we could be on our way to 308, and this is about a 180-minute time frame chart. I also did prepare a little shorter-term chart because I think that there is a pretty good count here that I wanted to share that would hopefully tighten up what we're looking at. So I'm working currently off the assumption that this extension here is going to turn out to be the middle of this move. So if that's the case, we really shouldn't trade back below 296, and we should pretty much see 303 tomorrow. So this looks good to me. I'm not counting this as an impulse rally because, again, I believe we're getting stuck in some ridiculous consolidation. So I believe it's some kind of a C wave, and there could be a number. It could be 1, 2, 3, 1 2s in here, and I don't know how many 4s. So this looks like we could be setting up the first small fourth wave consolidation, perhaps a triangle. Not really sure, but that's what I'm thinking. And again, 303 would be the first objective here, assuming we don't fall back below 295. Quite the drop in gold today. Really have to work off the assumption this market is not done going down, and this too is some kind of a courtesy bounce or a courtesy rally. I think the most realistic maximum upside is somewhere in the vicinity of 1285, and it would probably be better for the bears if it failed closer to 1279. So again, boy, this market has to do a lot to convince me that it's turned back up. So bearish on gold, courtesy rally opportunity, looking for lower prices. Finishing out the review here, looking at the euro currency, which washed out the previous low today, which invalidated the prior bullish count. But I am sticking with it here. I'm working off the assumption that this market is still ready to roar in some kind of a C wave. If we can hold the level 112.15, it held following the rally. Second wave pullback, we move above 112.80, 112.85, the market really should fly. If it doesn't, if the market does rally and it doesn't fly, we'll have to reevaluate the situation, and it would suggest we're in a triangle and could continue to move sideways for quite a long time. But I still prefer the long side here. On weakness, I think the risk reward is just really big on the upside. So that's it for me today. Ron Feinstein, New Wave Forecasting, October 4th, 2016.